Bitcoin is making a spectacular comeback. After years of criticism, skepticism, and decline, 2024 marks a new era for this digital currency and the entire cryptocurrency ecosystem. Veteran investors call it a moonshot, Bitcoin to the moon, not just because of its potential price surge, but also due to its profound impact across finance, technology, and even global politics. So what lies ahead for us in 2024? These 10 predictions are not based on speculation alone, but on real data, trends, and deep market movements. First and foremost, we can't ignore the most crucial event, the Bitcoin halving. In April 2024, Bitcoin underwent its fourth halving, slashing block rewards from 6.25 BTC to 3.125 BTC. This isn't some random event. The halving mechanism is hard-coded to maintain Bitcoin's scarcity. What's fascinating is that in all three previous halvings, Bitcoin's price surged dramatically afterward. History doesn't lie. After the 2012 halving, Bitcoin rose from a few dollars to over $1,000. In 2016, from around $400 to nearly $20,000 by 2017. And in 2020, from about $9,000 to over $60,000 by 2021. With a low of around $16,000 in 2022, many analysts now believe that Bitcoin could easily reach $100,000 or more in 2024. But behind that price surge is a much bigger shift in the global financial system. We're witnessing a massive influx of institutional capital into the crypto market. What was once seen as a playground for rebellious tech geeks is now squarely in the crosshairs of Wall Street giants. The SEC's approval of spot Bitcoin ETFs has flung open the doors for legitimized capital flows. Names like BlackRock, Fidelity, and ARK Invest are no longer on the sidelines. They're entering the market with clear strategies and hundreds of billions of dollars at their disposal. With ETFs, pension funds, insurance companies, and investment banks, institutions that were previously wary of risk can now access Bitcoin as a legal, liquid, and regulated asset. This will fundamentally reshape the market structure, reduce volatility, increase stability, and fuel long-term growth. It's not just Bitcoin making waves, Ethereum is staging a powerful comeback too. After completing the merge upgrade transitioning to proof of stake, Ethereum now consumes over 99% less energy. This revolutionary change has made Ethereum far more appealing to ESG-conscious investors. But that's only the beginning. Upcoming upgrades like dank sharding and rollups will scale Ethereum by hundreds of times, cut transaction fees, and boost speed. As the backbone for DeFi, NFTs, DAOs, and thousands of Web3 applications, Ethereum is being likened to the operating system of the future. Some experts argue that if Bitcoin is digital gold, Ethereum is the internet of value. And if that's true, a $10,000 ETH is no longer a wild fantasy. Another certainty for 2024 is stricter oversight of stablecoins. Coins like USDT, Tether, USDC, and DAI serve as the lifeblood of the crypto economy. However, past lack of transparency, unverified reserves, and centralized risk have previously shaken the market, most notably with Terra USD's collapse in 2022. That's why major nations are pushing forward with stablecoin regulations. In the US, the Genius Act passed by the Senate marks a historic shift. It not only protects consumers, but encourages financial institutions to issue stablecoins under bank-grade supervision. The law outlines strict standards for transparency, asset backing, and reporting. Meanwhile, the EU and Japan are also rolling out similar frameworks. As a result, trustworthy stablecoins will survive and thrive, while speculative or dubious ones will be phased out. At the same time, DeFi, decentralized finance, is waking up from its slumber. Platforms like Aave, Compound, Uniswap, and Curve are launching new versions with friendlier interfaces, enhanced security, and mobile wallet integrations. Lending, yield farming, and liquidity staking are no longer reserved for tech-savvy users, but are becoming accessible to the general public. The goal is to replace traditional banks with transparent, 24/7 decentralized protocols. Particularly exciting is the integration of AI into DeFi, which helps automate risk management, personalize investments, and make real-time decisions based on live data. If DeFi can meet expectations in security, user experience, and regulation, it could become the foundation for a fairer, more open financial system. Meanwhile, a quiet but powerful trend is forming in 2024. the fusion of AI and blockchain. Artificial intelligence is reshaping every industry, from healthcare to finance, but faces challenges around data ownership, transparency, and ethics. Blockchain offers solutions. Projects like Ocean Protocol allow users to monetize data without sacrificing privacy. Fetch.ai is building networks of intelligent agents for autonomous transactions. SingularityNet is developing infrastructure for decentralized AI that can collaborate and learn independently. This convergence won't just make financial applications smarter, it will transform how society manages data and privacy in the AI era. Memecoins, once thought to be dead, are also making a comeback, but in a different form. No longer just hyped tokens like Dogecoin or Shiba Inu, boosted by Elon Musk, the new generation of meme coins has clearer goals. Many are integrating NFTs, governed by DAOs, and backed by roadmaps and even venture capital. These are no longer just jokes. They're becoming cultural movements, artistic statements, and viral marketing projects. With their built-in virality, meme coins still have the potential to explode, but this time with a stronger foundation. NFTs, non-fungible tokens, are also evolving beyond the days of overpriced JPEGs. In 2024, NFTs are being used in real-world applications. Think NFT tickets for concerts or sports events, digital certificates for degrees and training, music rights, and even real estate titles. Tokenizing real-world assets ensures transparency, prevents fraud, and opens global trading opportunities. NFTs are also being used for identity verification in the metaverse and Web3 platforms. Instead of fading after the speculation frenzy, NFTs are maturing, becoming more useful and more integrated into everyday life. Meanwhile, many governments are taking a bold step forward, launching central bank digital currencies, CBDCs. China's digital yuan has already been piloted in over 200 cities. India, Nigeria, Brazil, and the EU are experimenting with their own models. Even the traditionally cautious US is exploring a digital dollar. CBDCs promise faster payments, transparency, anti-money laundering benefits, and better monetary policy management. But they also raise concerns about privacy and government overreach. Most importantly, CBDCs present a direct challenge to Bitcoin, one centralized, the other decentralized. This battle will shape the future of money on a global scale. Finally, there's a prediction that's making financial leaders rethink everything. Bitcoin might become a reserve asset. Once unthinkable, it's now gaining traction. El Salvador became the first country to recognize Bitcoin as legal tender. Inflation-stricken nations like Venezuela, Zimbabwe, and Argentina are exploring Bitcoin as a hedge. Corporations like MicroStrategy and Tesla continue to hold BTC as a strategic reserve. And if more countries, companies, and financial institutions follow suit,